So we're live with episode 4. Today we are here with Eoin O'Riordan. We're going to talk about the important numbers for small business owners. Loosely, we're going to cover revenue do's and don'ts, paying yourself a salary, what systems to use, credit control, the important numbers, what's important, what do you need to educate yourself on, P&Ls, gross profit, net profit, cash flow, things like that. So
and top financial tips for business owners.
Eoin, you're a director at Leahy O'Riordan Chartered Accountants.
That's right, well done.
Yeah. When did you set up business, or when did you become a director?
Good question. So I joined Leahy Co was the original practice. It was started in 1986.
Yeah.
I joined in 1999.
So you were only born in 1986.
So we're young, very young coming in
Yeah.
as a partner, right? And then we converted to, again, for a variety of reasons, we converted to a limited company in 2016.
Sounds like tax evasion.
No,
You can tell us more about that.
There's a number of bona fide commercial reasons for it. Again, we now have 3 directors, Eamon Leahy, myself, and Peter Dawson, who's the third direction as a director. As the practice takes off and gets bigger, it needs more hands on deck trying
Right.
to
So
manage
Peter's
it.
a director. I remember
Peter's a director as well.
we met Peter in 2009 when we first engaged yourselves. What happened in 2009?
That's right. Yeah, that's when the business, my first company, went into liquidation, and we employed, at the time it was Leahy Co,
Correct.
to manage the liquidation of the business, and that's where we got to know each other. And then when we formed a new company, you became our first customer, and subsequent then you became our accountant. And I think over the last 12 years, then we've developed quite a strong business relationship. You've been a great advisor to us, and also on a personal level as well. Yeah.
Yeah, just to support what Paddy's saying there. We invited you here today because we know you so well personally. We're 12 years knowing you. You've given us some incredible advice over the years. And you'd have similar philosophies to the way we run our business and what we're talking about here on the Business Fitness podcast. It's not all about making money. It's not all about growing your turnover and all that stuff. So there's a lot of things that accountants you helped us with that maybe people aren't aware of. That an accountant's function is much greater than
Numbers.
talking about numbers.
Yeah.
Although we're here to talk about the numbers, there's a lot more to it, and that's part of the point of the episode. Yeah.
Absolutely.
So do you see many small businesses starting out to have no idea about accounts?
Yeah, I think when you're set up in business, you have an idea, you want to get it going, and really, if everyone was to wait for the right moment to start in business, nothing would ever happen. It's never the right moment. It's never the right time. It's about making the decision and going for it. And typically, you're getting someone coming to you a few weeks, a few months, rarely a few years, but coming to you and saying, "Look, I've started this business."
Yeah.
And more often than not, if someone comes to you and says, "Look, I've got this idea for a great business," as an accountant, you're trained to see the pitfalls and things that could go wrong. So by the time they finish the meeting, the thing hasn't. You've burst the bubble, and it's not going to happen.
Okay.
Yeah.
So do you know what? You're taking a chance. You two of all people know you're taking a chance. You've had the rough and the smooth with it.
Mm-hmm.
You started and you get going. The first thing on the agenda is rarely what bookkeeping package I'm going to keep. It's what's the business going to be. I'm a huge believer in doing a business plan, and I mean not paying someone to do a business plan. I mean struggle your way through the 10 pages of a business plan to focus on the key questions, which is, who are my customers? What is my product? Who am I selling to? And everything. How am I going to make money? Like, is this a good business idea, or is it a nice idea for a hobby and something to do?
Okay. So you're getting into the detail. Paint the picture from the start. That's the whole point.
Yeah.
That's what I think. And I think the organizational part, it's very important.
Okay. So even what you're saying there, right? As the accountant, you're saying do a business plan. Sounds like business guidance. More. It's not even what you'd expect from an accountant, as far as I know.
No.
Well, I think that we used to have a joke that when we give presentations, but who could say failing to plan is planning to fail the most times in a presentation?
Oh yeah,
right?
Yeah.
But I do believe it. I think you do go. If you go out, if you don't go out with some kind of plan, some kind of objective, and it's not just financial. Don't forget, it all feeds in. The sales, the gross profit, the margin, the expenses. Is this actually going to be a viable business? Is it going to make profits?
Yeah. It's such an important thing to have at the start, and it's a good conversation to have, an exercise to have. I think a lot of us have a romantic idea of starting up a business, and they look at all the good things that happen, and it'll be successful, and it'll be great, and we'll have money and all that. But it's important to realize how hard it is to start, and the amount of work and graft and hustle you have to do to even see 1 inch of success coming your way.
Yeah, I've often seen people set up in business think it'll be great now for my own boss because I can decide what holidays I can take, and the reality is it's actually harder taking holidays when it's your own business than it is when you're, no one's going to tell you as the business owner you need to take 2 weeks off there. Your statutory holidays are there. The reality is, if you haven't got the business set up right, taking holidays can be difficult, and people forget that and people miss that. Again, that feeds in with the overall business plan. It feeds in with the overall business and how the business is going to work. It depends on, again, what is the business? What are you doing? Are you selling products? Is it something that can be easily, as we'd often talk about, make yourself redundant from your business?
Yeah.
Now, it's not one for today, it's something you've done already. But can you, it's and it feeds in with that, and that feeds in with the overall plan of the business.
Yeah. Well, you would have gave us a lot of sound advice over the years, especially at the early days when we didn't really have a clue what we were doing. Even though Paddy had a business before, I'd been through college. We sat down, I think, 15 months in with, I think I had Sage at the time. Hadn't done a bank rec since we started. Had no idea. The P&L was all over the place. Hadn't posted anything correctly, and it was upside down. So I think at that point you sat us down to get things in line, and then we would have probably sat down a year after that. And I remember that there was a time when it was a shit or get off the pot conversation was had, because you were advising us that this was all fine, but you're not making any money here.
Again, from memory.
Do you remember that, Paddy? I think you were away at the time.
Yeah, I think I took a family holiday.
Yeah,
a well deserved one as well. It was 2012. Mid-year, and we had a bit of a break, and then you sent me a text because I knew you guys were having a meeting, and I was like, I wonder how that went, and you sent me things. It's all good, don't worry about it, see when you get back.
Yeah.
So we got back, and it was like, okay, we're making a big loss here, it's not going well, and you were like, look guys, it's time to shit or get off the pot, because you really aren't fully committed here, and you need to commit yourselves to make it work, or else you just pack it in. So that was a wake-up call for us, really, to realise,
Yeah, there's a lot of different things going on at the time.
Massive amount of things going on at the time, yeah.
But from your point of view, at that point, there was a turnover there. There was a margin there, and there were overheads. So there were a number of things we could manage, we could adjust. We didn't have to, we weren't starting from scratch. We had an opportunity there to increase the sales in a balanced and managed way by putting a plan in. So we identified at that stage, what do we need the turnover to be to make this profitable?
Yeah. And
we needed to do that by the end of the year. So we were able to break that down. We were able to look at the margins then. So were we creating sales by, selling cheap with a low margin? Waste of time at the time.
Yeah.
The other one, the other element there is the overheads. What were the expenses that we had? Were we paying high rent in the premises that we weren't using, or were we working from home? Again, we were looking at that stage. You were working from home.
Yeah.
There was no real overhead.
No.
And really, you were taking very little of anything out of the business. You were working hard, generating turnover, and making no money. And then it was the time to sit down with a clear plan and figure out what was our break-even number going to be. How much sales do we need? At what margin? So we locked into a margin. So sales weren't to be made unless we hit that particular margin. We need to hit so much sales per month. We needed to control our expenses. And then we put in a budget. We put in a budgeted salary for each of you. Yeah. A market salary. Now, we didn't take it initially, but we knew when we worked out our break-even that it was a break-even on the base that we were going to be pulled that salary. Yeah. So that at least we were working towards a viable business.
That's amazing, because if you were to ask 20 business owners or startups, what did your accountant do for you? You wouldn't think that an accountant would go to that in-depth amount of analysis and support and coaching. You think it was just send me your invoices and I'll just put it on the system, do your books every month. Like, it was phenomenal support that could be offered, at the start. Like,
yeah, I remember we were afraid to pay ourselves because the business, the cash flow is so critical and limited that we needed somebody to say, lads, you know, this isn't viable long term. You have to really ramp it up now, and you have to pay yourself, because we were relying on the state for a long time, which is a crutch that you can get used to, and you know, they didn't put us under pressure to end it, but we had to make the decision to cut it off ourselves. And
but again, if you're not taking a salary, it's not a business. If you're not taking a salary, it's a hobby.
Because when you make that statement to us, that when we're sitting across the table and you tell us that, suddenly you've undermined the whole thing, and we go, oh, no. He's right. Yeah, there's the hard truth, and that's what we needed to hear.
It's honest. Yeah, we need to hear that. Yeah.
And I think I made the decision at the time to stop doing some of the part-time stuff I was doing. You know, stop maybe going gallivanting so much, and I knew that I had to really commit, because although I was committed, it wasn't do or die till you take away all the support and the crutch and all that stuff.
You're making it sound like I cut all the fun out of your life, but that's it. Well, that's a bit harsh now. Bit harsh.
Yeah. No, you added a lot of fun too. Yeah.
Well, Owen, you know, I do call you the butcher.
He calls you the butcher. Every year we go and see, and I have the management accounts. That's what happens.
That's a first.
The butcher. Yeah.
I present my glorious management accounts, and Owen gives them back to me.
Sharpening his knife and the thing.
A few weeks later. And all the goods gone.
But again, interestingly, from my point of view, the your perception of what the accountant should do and does, like really with the technologies out there and the software that's out there, with a bit of education, a bit of training early on, you shouldn't be coming to the accountant trying to find out how. It shouldn't be a surprise to find out we've made money or we haven't made money. It was in the first year because the system wasn't in place, and the way and the software it's not expensive. And you know, once you're organised and you've got a process there, you should have a fair idea. You shouldn't be going into the accountant once a year for him to tell you how good you're or bad.
There's lots of people must do that though.
There are initially
hand you a book of receipts. Maybe sole traders more than
I put it this way: there are people out there who are operating like that.
Yeah,
but they shouldn't be.
Yeah.
In that you know, it's not difficult, and if they are. You know, it's not difficult. The software is there, a bit of organisation and systematic. Again, that's not the type of work that we want to be doing within our office, because it's not satisfying.
Okay,
it's not rewarding. It's look, we'll do it if clients want us to do it. You know, you do what the client wants to do, but it also can give a problem if you're waiting for a year to pass, and if you're disorganised. It could be 6, 7, 8 months after your year end before you make it to the accountant. So you're nearly 2 years in before you realise it's a problem, and then you're in a hole.
Wow.
Yeah.
So really, for me, it's about, okay, number one, is I believe we're working to a retirement plan, that ultimately we're all going to retire in some manner and means. There's a number of boxes you need to get ticked when you get to that point. So number one for me is a social welfare pension. So you want to make sure that you're taking a salary out of the business. Or if you're a sole trader, that you are paying your PRSI, and the old-fashioned stamps, as they call them, at a minimum. The second box you want to have ticked when you get to retirement is pension, that you have a company pension or privately funded pension. And again, you need a good pension advisor for that. As accountants, we don't do that. You know, it's a pension advisory that you need to get. The third element is a lot of people choose to buy their own family home. The last thing you want to do is find yourself wanting to retire at 61, 62 and realising that you have 15 years left on your mortgage. Or that you're going to start buying a house now. That's not an option. The fourth element is the company and the business itself. So is this a company that you can, that you can sell on? Or revenue of a lot of reliefs there, retirement leaves for business owners. You can get up to 750,000 tax-free. It's the best value money you're going to get out there by selling your business. You can also achieve that by...
You can get 750 grand tax-free for selling your business.
Tax-free in retirement relief.
So you have to be over a certain age for this?
You have to be over 55 to get it.
Okay.
There are a lot of other conditions around it.
Yeah.
But you have to work for more than 10 years within the business as an employer, etc., etc.
Yeah.
But it's the best value money that you're going to get out there.
That's good.
Now, again, we were talking about liquidations earlier. There is another option there. in that if you 80% of the liquidations that are carried out are actually solvent liquidations. They're not all the bad news liquidations that we talk about. It's people that have had a business, they get to the end of the business life, there's money left over, they haven't been able to sell the business, so they can liquidate that company and they can execute the retirement relief.
You can take the money out that way. I didn't know that, yeah.
Correct.
So you're not the commercial...
You should have known it, because we spoke about it several times over the last number of years as a potential plan.
But when something's this far in the distance, they just... Selective listening.
That's it. But and then the fifth element of that retirement plan is, any other investments, whether it be property, savings, shares, cash that you have in the bank. I believe that we're all working towards that plan, but not at the cost of living at this moment in time. So again, like that, Paddy, things are going wrong. You still need to take the holiday. In fact, sometimes the holiday is more important than putting that money into that pension. Again, you can't. You mightn't be able to put 50 grand into your pension this year if you really are trying to get a deposit together to buy a house.
Yeah.
So there has to be a balance there. And for me, everything vests to, your car is falling apart. It's costing you now money. Really, maybe this year is the time to ease off the money going into that pension and increase the salary. What I found over the years is, I'm dealing with owner-managed businesses, RG, of different scales, from very small up to very large. With clients working to different plans. Over the years, then you'll see that, once things are settled on if there are financial issues in someone's personal life, and their only source of income is the business, well, there has to be some kind of marry off, or some, if the only funding is coming from there, they need to be addressed. When the personal life is interfering with the business, it's a difficulty.
Yeah.
Okay. Right. Let's go back to you, right? A little bit of history. Where did you grow up? Where did you go to school?
Yeah, very proud to say, I went to Closhane, was the local Christian Brothers school in North Farm. Got a fantastic education there. I then repeated my Leaving Cert. I was very young to the Leaving Cert. There was 7 of us at home. My sister was Leaving Cert at the same age, so 2 kids going to college the same year wasn't going to be a plan. Repeated the Leaving Cert. I did the BCom in UCD. Then got a training contract with a very small firm of accountants, where it was very hands-on. I learned a huge amount there. Okay. We were dealing with very small clients. A lot of them were involved in the horse racing industry. We had a lot of clients around other industries. Again, regulation was far easier then, and that it wasn't unusual that instead of doing year-end accounts, that the company be liquidated, they start a new company, and the legislation at that stage allowed for that.
No way. So
from my point of view, there's been huge, and I would believe largely for the better, that regulation legislation has increased a lot. It's also tax rates reduced a lot. The VAT rate now is 23%. The corporation tax rate is 12.5%. It's all led to
Is there more tax being declared now than there would have been at the time when you started?
Well, I believe that all the clients I ever had have always paid all their tax, as you would well know. But
if you are a revenue auditor, please tune out now.
I know. I do think it's led to. Actually, what I believe pushed it more was the banks, and that if you're going to a bank now looking for a mortgage, that they're looking for proper accounts, possibly signed off by accountant, but not necessarily. And at a minimum, they're looking at your tax returns.
Okay.
Yeah.
So really, the whole culture, the whole environment has changed. I think, and particularly when there's a 12.5% corporation tax on a limited company, and when there are the other incentives there, it's also very difficult to manage a business properly if there isn't a proper system. And if people are dipping their hand in the till, it's very hard to know. I'm presenting a set of accounts, and they know that there's something else going on. You can't advise someone properly when you don't have the full picture.
Yeah.
So I believe. Look, as far as I can see, as far as I'm concerned, the regulatory environment that we're in, but also the banks and what they're expecting, are a big driver. For
I only asked you where you went to school.
That's exactly what you did, yeah. I was wondering where this is going. And that's how that ended. No. Moving on.
Yeah, so again...
And then I turned 50.
Sorry, yeah.
Come here, do you miss Sig and Zag?
This is the Ray Darcy coach. I used to get that.
Brilliant.
You do have a very Ray Darcy look about you.
You sure do.
And now you say that, I know how you felt here looking at Sig and Zag on the other side of the table.
Well played.
Good comeback.
Well
Good
played.
comeback.
Touche. Which one am I?
Okay, so into college then, trained in a small firm.
What did your mum and dad do on?
Well, my dad worked in the Greyhound Stadium in Shelburne Park. So there was 7 of us at home. So again, my mother would have been rare enough,
Full-time mummy,
full-time mummy, but also did a lot of part-time work.
Yeah.
Again, she would have worked in the local secondary school and the library at different stages, and would have had a number of part-time jobs, over the years.
Yeah.
You know?
When little Owen was running around with his cowboy hat on,
That's
going,
it.
what was the aspirations there? What did you want to do when you were older?
Actually, interesting question, because going through school, I got to fit. One of the questions I've been asked sometimes is, how did you decide on accounting? It was interesting because what caught me with it was, when I was in 5th year at school, it was an easy solution to answering the questions for years. What do you want to do? Well, do you know what? Become an accountant, because it was you'd leave school, you'd do a degree, you'd sign a 3.5-year training contract. So that was 6, 7, 8 years before anyone's going to ask you again. You didn't have to make another decision. Straight up.
And then
I
you
liked
went home,
numbers. It was very clear.
Saw Ian Dempsey and said, I can do that.
Yeah.
I'm going on the telly.
With Sig and Zag, yeah.
Hey.
And it's interesting you say that, because when I was in 5th year in school, I think it was 3rd year actually, just doing my junior cert, and I was sure I was leaving school. I went to the career guidance guy.
Avoidance.
Same
Slip.
team.
Yeah.
Same team. And I can't remember his name, but I sat down and told him, and he said, why don't you go to an accountancy firm and do like an internship or an apprenticeship or whatever they were calling them. And to me that sounded so attractive, because I was going to go in there for a couple of years and I was going to get all my qualifications, and by 18, 19 I was going to be a qualified accountant, and that was the plan. I don't know what happened after that, but didn't. Obviously my mum said no, that was it, that's what happened.
But again, from my point of view, it gave clarity at that stage, which was great.
Yeah.
What's fascinating is what a lot of people miss about accountancy as a career. You can do lots of things with it.
Owen, what books would have influenced you in your journey growing up?
You're not allowed to say the Bible.
No.
The tax summary. Institute tax every year, the tax summary. Big influence to me every year. Joke aside, what I found when I knew I was coming in this, and I was expecting this question, don't think it's a great question in all fairness, right?
That's because I asked that. That's very mean of you to say that.
Books shape us. Come on.
Yeah, terrible.
Yeah, so when I went actually looking, I've bought a number of books over the years, but I tend to start reading them, then pick out a few good points of interest, and I'm very poor at getting to the end of them. I said there's a guy called Shane Craddock. Shane Craddock is a business coach who I found very, very good over the last 10, 15 years. And he'd written his first book called Inspire Me, which is a book of quotes. And oftentimes when you're kind of, you'll see one of these quotes, and sometimes you think that's not that relevant to me, but it kind of takes you out of your day-to-day thinking and makes you kind of stand above and look at a bigger picture. Yeah. So find that useful enough. Shane sends a weekly email through with, can kind of stop you for a moment on the day if you're caught in something, or set of accounts that aren't looking right, or situation with a client that you don't feel is going right, or something there, and just stops you for a second and puts the rest of the whole thing into perspective.
Yeah.
Another book that again was given to me by an investment and pension advisor, a book called Enough, and that when is enough, and that's not. It's not. People get this perception that as accountants we're into mindlessly making money, and from what I believe is that when you're dealing with owner managed businesses, it's not mindlessly about the bottom line, and this book helps identify when is enough.
Desire is insatiable. Is it along those lines?
Exactly, and that really, do you know what? You're never going to have enough, because if you have 10 million euro, 15 would be better. I could do more with it, but it's getting that balance between life, family, home, time to yourself, and work, and making money, and that's a difficult balance that's hard to get. And there's another book I found quite good, is again another life coach called Declan Coyle. It's a book called the green platform. Again, like that, you work your way through it. Never been great for, when I was younger, was fantastic reader. But the nature of the business, what I'm doing is I'm dealing with a lot of small businesses. So I'm dealing with a lot of people on a daily basis. You're more inclined to be, sitting down and getting stuck into a book. It tends to be a kind of a fictional type book that I'll be getting more stuck into than the...
Sorry, from what you're saying there, Owen, it sounds like a very holistic approach you have to your clients as opposed to financial. Is that fair to say?
Yeah, I think there's holistic approach, all right, but not without a plan, and not without tracking the numbers and having accurate numbers and knowing where it's going.
Well, without the numbers, you can't have anything else. Yeah,
absolutely.
Like a business, without sales, you can't have anything else.
Exactly.
You get the numbers right, and then you go a bit more holistic. Yeah.
Yeah, and again, for me, it all feeds into that. The idea of where we're ultimately going to, where we want to end up, and where is it bringing us?
Yeah. Okay.
Again, it's a journey you're trying to get to the right place at the end financially, so that when you decide it's time to stop, you've sufficient there.
The your firm, right? So you kind of do liquidations, yeah? Is that your niche? Do all accountants do liquidations? Is it, how does it work? Are you a specialist? What way does it work?
Good question. Actually, a very small percentage of our turnover comes from liquidations, but it is a key part of our business and has been for 30 years. Again, it's gone very specialist. There's a smaller and smaller number of liquidators out there. Again, regulations changed, made it more difficult. We've made a conscious decision to stay in that section, in that sector. Again, not a lot of, we all talk about liquidations. Liquidations are necessarily part of it. 80% of liquidations are what we call members' voluntary liquidations, where all the creditors are paid. Yeah. The other 20% are businesses that unfortunately, for some valid reason or another, can't continue to trade. From my point of view, again, with them, if the business is going to fail, let it fail quickly rather than slowly. Yeah. Before it's absorbed every single personal resource. We see people with a business that isn't going to succeed, and they remortgage their house, they sell rental properties, they take their savings and plough it all into a business that maybe ultimately it's time to step back and say, take the independent advice, listen to it and act on it.
So it reaffirms the whole point why it's so important to have an accountant, at your table, basically giving you advice from the start, being able to look at your numbers, being able to guide you along the way and help you put a plan together and look at that rather than leaving it too late.
Yeah, and not to be afraid to say, look lads, this isn't going to work. Yeah. Not an easy conversation to have, but better to have the conversation than to leave the two things struggle through.
Yeah.
What's the hardest part of your job or your service that you provide to clients? Or
I think that is the hardest part. You've got someone there who's full of enthusiasm and a real emotional attachment to their business. Yeah. And it's just not viable. And as we ran a course a number of years ago for the staff, we called it How to Tell a Client Their Daughter's Ugly. Basically,
Jesus Christ.
How to break bad news. How to break bad news to the client. And just to say it. There's no point in saying it is a great business when it's not failing. It is a money. It is finance we're talking about. All the other things feed in around it, but ultimately, clients are coming to you for financial advice.
Okay.
And if it's bad news, it's bad news.
I'm going to ask you a question now. It's going to be probably a stupid question, but maybe not.
No such thing.
No such thing. Besides accountants, who else works in an accountancy firm?
Actually,
I think that's
great
a good question,
Paddy.
Who wrote that?
Yes, I did.
I know you have a receptionist.
Yeah, I was going to start there because the backbone of our business, and most other businesses, is the staff. And when what we're looking for is great staff. So we have accountants, we have tax advisors, consultants, we have trainee accountants, all that feed in. But one of the key sections in our office is the administration function, and they keep the place organised and they make the place run more smoothly. And the same principle applies to a lot of the successful clients we see. Yeah. It's IT, it's admin, it's keeping our house in order. Right. It is the important. It means we don't miss deadlines. Yeah. Right. We have a deadline-driven business. we can automate a lot of that. We have systems that tell them, but someone has to run those systems, and that's the administration. And never underestimate.
So a traditional business would have a sales team, a marketing team, maybe a HR department, IT department, logistics, stuff like that. Is that stuff that everybody's responsible for within an accountancy firm then?
Well, again, you're saying businesses have all these departments. The reality with most owner-managed businesses, they don't.
Okay.
There's a smaller number of staff. That you've got people who are doing it, largely the director. When you started off initially, you were all those departments.
Yeah, we were, yeah.
Yeah. So within our business, again, we're a bit bigger. We've 20 odd staff. So yes, we have an IT section. Yes, we have an admin section. We've got a tax department. We have an insolvency department. We have an audit department. But we have an audit department.
That's all very serious.
It is, yeah.
That was very serious.
It is very serious. And it is very serious because, again, we're a regulated business.
Yeah.
We have our regulators coming in regularly, making sure things are being done properly. So, again, it's, I was going to say it's different to other businesses, but any two businesses you look at, they're all different.
Yeah.
What would be the biggest threat to your industry at the minute? And does it change over time, or is there always the same kind of threat?
Yeah, I think within, again, as a regulated business, regulation is one. It makes things, makes it more expensive, say, doing audit work, doing liquidation work. Biggest threat is...
Does that mean you're constantly checking the new regulations, learning, everybody's upskilling all the time?
It's a constant process. It doesn't start. Again, we have to do...
Does it cost?
Every staff member has to do continuous professional development every year.
Okay.
So there's a constant training, regulation changes, we've to train them.
So what happens if you get it wrong? What's the threat?
Worst threat is that if the regulators come in, there's a reprimand, a fine, or you're prevented from doing certain types of work. So we would take it quite seriously.
And do you know anybody else in your industry who's been reprimanded in that way?
Well, Chartered Accountants Ireland, in their monthly Accountancy Ireland, publish a list of the firms where there have been issues.
Name 5. Right now.
That's it.
So it's a serious thing then. You don't want
to. It is a serious business.
You have to really respect the regulation. Yeah.
Yeah.
Okay.
Other big threats in our business are staff. Again, getting the right staff, getting the right mix, getting the right people, getting them working right, getting great people.
That is the biggest challenge, I think, for most businesses.
It is.
That's never going to change, really.
Yeah. No.
How do you get the right staff and keep them? That's just...
Agree, and it's
a minefield, isn't it?
Again, it's from day one. I've always commented that. Again, what we're looking for is good staff, and so to get that fit is right.
Yeah, no, absolutely. And how have you grown over the years? Have you got a salesperson? Is it marketing? How do you find clients? How do they find you?
Yeah, again, specific to our business, it's relationship based.
Right.
So all our business comes from referrals.
Really?
From either, number one, from existing clients, or from other professionals that you deal with, whether it be bankers, solicitors.
Yeah.
Other accountants will refer us liquidation business, because you can't obviously liquidate your own clients.
True.
So all referral based, existing clients.
All referral.
All referral.
You do no outbound sales.
Well, we get a small amount of business in through internet inquiries.
So,
but again, we found over, because we're in a business we're dealing with people, that hasn't always necessarily. The better business comes in through people you know and referral.
Yeah. Okay, that makes sense. As an accountant and a bean counter and a money pincher and a butcher, as Paddy calls it.
Butcher.
Does that make you frugal in your personal life? Are you always monitoring things? Are you getting the bill at the restaurant going, he's have to charge me for 2 Cokes?
Have you seen this man's car?
We sort this out.
I think there's an instinct there, all right.
Yeah.
I think that there's an expectation, and if the bill comes within that expectation, it's a value for money now rather than frugal, I think.
Okay.
So, yeah, I think, there's a difference between cheap and value for money. And we all know that, don't we?
Yeah. Sure is. Okay, yeah.
So I'm keeping with the stupid questions we've been asking you for the last half an hour, right? What is the worst stupid question people ask you the most?
The worst stupid question people ask me is, what would you do if you're in my situation? And the answer is, I wouldn't have got into it in the first place because because I tend to be conservative in my decision making and plan things out. Not all the time,
yeah,
but particularly with a client who makes a decision, and that's the one that comes across for me.
Very good. Okay.
Interesting. Is there any accountancy jokes that you just...
Yeah, number 43.
Number 43. How does that one go?
Oh, it's brutal.
Go on.
It's just, I don't think it's funny at all.
Sorry.
It's 72. Sorry. In accountancy circles, we've got have it here actually, a list of all the accountants' jokes. You know?
Go away.
So 43 is, what does an accountant use for birth control? His personality. I just don't think it's funny. Obviously, any accountants listening, they automatically know 43, and you're getting the groans out of it. You know.
Oh shit, that's brilliant.
Yeah, no.
His personality.
Yeah, so there's.
Where did you find this?
Oh no, this comes in the accountant handbook. When you qualify, you get the reference of jokes with the reference of jokes with the numbers on them. You don't need to. So then when you're together as a group of accountants, you just call out a number and you laugh. You don't laugh. You know?
But it is true you have children.
I have children. Yeah.
Before you became an accountant.
Before, yeah.
Okay.
Then you flatlined.
Okay. Biggest issues you see from small business owners?
Yeah, I think the biggest one is cash flow management.
Yes.
It's a huge one, and
Do people mix up cash flow with bank balance?
Yes, people, there's a number of reasons where for cash flow problems, and it's just taking your eye off that ball. Yeah. And again, cash flow, there can be two. You'd often get guys coming in who are saying, "Look, got a cash flow problem," and actually, there could be two main reasons for it. Number one is that the business is profitable, so it's making money. Just they're not collecting the money in. Or the second reason is actually they've got no cash because they're losing money.
They're not charging enough, or they're not managing the costs.
They're not managing the costs. They're not making the sales. Their margin's wrong, and they're not, and there's no money to collect. So it's very fundamental, very easy to see, not very difficult to figure out once you ask the right person.
What systems or packages would you advise small business owners to use to monitor and track all that?
It's an unusually good question, Paddy. But it's not just about the package. It's about the process. So
you ask any woman, she'll tell you it's always about the package.
Well, for me, it's about the process, right? It's about, it's all very well having Sage, QuickBooks, Surf accounts. Xero is one that we're currently using. It's all very well having those, but if the banks aren't reconciled on it, well, there's no point in having it. Right. If you're not recording the invoices properly, if there's a separate system that's been undermined, that the sales instruments aren't being raised, or the stock isn't being, it undermines it. So the software itself is one element of it, but it's also the organisation, it's the administration, that the stuff's being done on a timely basis.
Okay.
Yeah. Can anybody learn basic bookkeeping?
Yeah, I think almost anybody can.
Yeah. Well, the basics that you need to run a small business. So if I come into you and I've just started up a business and I'm asking you, should I do it myself? Should I hire somebody in-house, or should I outsource to a bookkeeping firm? What's your advice?
What I think, it depends on the business and the skill set and the time available to the person running it. In an ideal scenario, look, automation is coming in. There's a lot of systems out there that very cheaply now will automatically do the inputting and take that grunt part out of it. Yeah. If you use an owner managed business, you need to stay on top of it yourself. You need to understand it, and you need to know what's going on. Most small businesses can't afford to pay someone to record the information and report back to them.
Yeah. No, it's good to have your finger on the pulse. I mean, you need to have that information there. Yeah.
Like, what would you think are the most important numbers for a small business owner to understand and be mindful of?
Okay, well, number one is, I'm going to say, budget versus actual. So we have a plan there: sales, gross profit, and then net profit, money in the bank. Simplest way to run a business is to pay all your bills, including the revenues they fall due, and then all your problems, and then collect your money as soon as possible. Then all your problems vest in the one number, which is that bank balance. That's the simplest way to run a small business. But again, that takes organisation and knowledge, and a small bit of education along the way. I think is the key to it.
What percentage of your clients will be sole traders? Just curious.
I would suspect roughly about 30% to 40%.
Would sole traders be the typical kind of client that maybe would struggle with the bookkeeping the most, based on the limited time that they might have?
Yeah, some of them will, but it's actually the divide for me isn't sole trader limited companies. It's organised or disorganised. Okay. So you can have sole traders there who are very, very organised. Yeah. They're on top of their stuff. They've simple, cheap software. They're invoicing quickly. You can have a electrician there who comes out, does a bit of work for you. When he's leaving, you get an email with the invoice immediately. You go to the physio. By the time you're leaving the door, you've paid and you've got the invoice because it's easily systemized. So not necessarily.
Interesting. Okay. As a business owner, paying yourself can be a little bit, at the start, you're not sure whether to take a salary, fixed salary, just take a percentage of the profits. And then there's maybe a romantic idea that at the end of the year, there's a big dividends payment. How does that differ and how do you plan for that? And what would you advise?
Very good question. Very different between a sole trader and a limited company. Don't forget, as a sole trader, a one-man show, you're not a limited company. At the end of the year, you pay tax on your profit. So when you take money out every week, there's they're drawings. So you could make 50 grand profit, take 30 grand, and you're paying tax on that 50 grand profit. That's clear.
Do you get a big tax bill then? You get a surprise?
Potentially, yes, you can. So the key problem to watch out for there is that, as a sole trader, you can find if you haven't collected your debtors in, the money you're owed in quickly enough, you can find yourself being assessed a tax on money that hasn't actually come into yet, which is hugely problematic.
Does a sole trader need to put money aside in a separate account?
Yes.
In anticipation, can they send money to the revenue in advance?
Yeah, what I'm inclined to do, again, is sit down with a client and work out roughly what we expect the numbers to be at the beginning of the year. We can estimate them what we expect the tax liability to be, and we can give them an amount of money that they put away on a monthly basis so it doesn't become a surprise at the end of the year.
It requires a bit of discipline, doesn't it?
It requires discipline, and the second thing is the tax deadline is basically in early November for the previous tax year. If you're working to that deadline, it's a deadline. It doesn't mean you have to wait till that date. If you can do your tax return in March, April, there's less of an exposure. Then there's more clarity. It's easy to plan. Again, it goes back to organisation and planning.
Credit control on. You get people coming in who aren't managing their cash flow to the best of their ability. They're running out of money. How do you advise them? What services do you provide in that regard? Can you do credit control for them, or do you have to teach them to manage this themselves?
A good question, but really, when a business has cash flow problems, they probably can't afford to pay to get someone else to do it.
Yeah.
And the second thing is, the more they're outsourcing, the less in touch, particularly as a small business that they are. They're less in touch with their own business. Step one is to go and make sure the invoice is raised. Go and raise the invoice. If you haven't raised the invoice and sent it out to the customer, you can't even start thinking of collecting the money.
Sounds obvious, but
a lot of people forget it.
Okay.
Again, it depends very much, what the business is. Again, with clients who are kind of doing bigger contracts, payment on account, maybe that's the way it has to be done. So it's to look at it's to just look at the money. When's the money going to be paid? So step one is raise the invoice. The next thing is who's going to in culturally in Ireland, we tend not to be so good at automatically paying. We tend to have to be asked to pay. So if you don't ask, you're not going to get paid.
Yeah.
So the question is, who's going to ask? Is it going to be done by email? Is it going to be done by telephone call? Are you going to text? Who are you asking? Again, dealing with bigger organisations, it's about having the PO number. If you don't have the PO number, you're not going to get paid.
True. So
it's about the organisation and the system. Again, if you're dealing with a government body, it may well be that you need a tax clearance cert. So it's getting organised before you start, particularly if it's a large amount. Different business. I don't know if you're selling a small, retail business. There's less issues with cash flow compared to other, business where you're dealing with other businesses, and you're having to give credit.
What if you've a client who can't get paid? It's crucial. They're not going to get paid. It's going to put them under potentially. What's your advice to them?
Really, at a certain point, you have to decide, seek legal advice.
Okay.
That do you need to start getting the solicitors to send letters? It's very important that if you're selling goods, that there's a retention of title clauses on those invoices.
What does that mean?
What is it called?
A retention of title.
Very good. Okay.
You'll be very familiar with it as well.
So we have that on our invoices, as far as I know.
Yeah. What that means is that, look, really, if you if the invoice hasn't been paid, that you've got the right to go in and take back your goods. It's particularly important in a liquidation situation.
I've threatened to do that a few times.
Yeah, very, very, very important.
Yeah. I've also threatened to put my mankini on and show up at the premises of some places that are customer facing. Show up in my mankini to get my money. I'm going to come in.
Show him the mankini.
I'm going to come in with a mankini on, and
he carries it around with him just in case. There's one there. Look.
If I send you a selfie with my mankini and saying coming in tomorrow,
he's coming in tomorrow
to get my goods back.
This man means business.
And I'm going to do a little dance.
Yeah, well, as a professional, as an accountant, what you do with your mankinis between your mankini, I'd really be more like a retention of title and a solicitor's more my.
If you're gonna go in and get it, go in and get it.
Some amounts are not collectible by legal means because they're too small. I think the last time I used the mankini, I was out €300.
Yeah.
So
we got it too.
I'm talking about using those sort of methods when it's not big enough to go legal. You know that the place that owes you the money is not having any financial difficulty. They've just chosen not to pay you. Maybe it was the first order. Maybe they're just messing around. Because there are lots of places like that, unfortunately. And at the very start, it's hard to identify them. So sometimes you have to think outside the box as well with credit control.
No, 100%.
I agree that. And it's even a bigger problem for, let's say, small tradesmen who are dealing with a bigger contractor. And really, it's being careful as to who you get into. Not all business is good business. Not all customers are good customers.
Yeah, that's why we've invested now in like a credit check software. So every customer we get as part of the process, we'll go through them and have a look and see and make sure that they've got good credit ratings, which means we're very confident about giving them credit, setting a credit limit and stuff. So that's something that should be always taken on board to try out. Again,
can be another tool in the arsenal.
Absolutely, yeah. It's stood to us anyway. We haven't been burnt since we've adopted that software. Pensions. Talk to us about pensions. What's your advice for small business owners when it comes to pensions? Like when to start, employers versus employee contribution, all that fun stuff.
Yeah. For me, pension is the key. It's one of the 4 pillars of the retirement plan as far as I'm concerned.
Okay.
I think obviously the sooner you start, the better.
Yeah.
I think you need a good pension advisor who will be able to give you the proper and the professional advice on it. Maybe agree to pay a fee instead of a commission. Pay for professional advice on it from the pension advisor.
Right.
However, pensions are fantastic, but from your own point of view, if you haven't got enough money to pay the mortgage, if you haven't got enough money to put food at the table, you haven't been able to take a personal holiday, maybe not the best time to be funding up your pension. It's a question of priorities, and again, that all fits in with the greater plan. Again, that said, I'm a big believer in pension, and the sooner you start, the better. But in perspective.
What about the idea that the business is the pension?
Yeah.
So you're going to get to 65, you're going to sell the business, you're going to get your 750 grand. That's your pension funds. So why do I need to put money aside?
Well, that's one plan. What happens if you can't someone to buy the business? Buying and selling businesses is quite tricky. It's quite difficult. It can be a slow process, and there's no guarantee with it. I believe, again, with balance across it, it can be part of the plan. Again, there's no guarantees that the pensions will perform either. But what you're trying to do is mitigate your risks across a number of different headings. You don't have all your eggs in one basket.
Yeah.
And that would include selling the business.
Would you advise any of your clients to leave their business running while they retire, hand it over to someone else, and keep drawing down a salary? That's your pension.
Put a management team in there to look after it for you.
Again, anything's possible in theory, but it'll depend on the people, the type of business. With the clients that we're dealing with, everything happens. Everything can happen. And there's a balance with everything. There's no one magic one fits all for everybody. Okay.
Something that we learned many years back, I think when we were setting up, we didn't know how we were paying ourselves maybe with the wrong PAYE set up at the wrong rate or something, and you advised us to pay ourselves as a PAYE employee for a couple of reasons. I think if things went south, you could claim social welfare. As a director, you don't have to pay yourself as a PAYE employee.
Actually, no. Be fairly clear with revenue now. If you're a limited company,
if
you're a limited company, really, you should be taking a salary.
Okay.
It should be going through the monthly payroll.
Yeah.
The only other it used to be historically that you would take a fee once a year and pay it as self-employed income, but it's a long number of years since we would recommend that.
That's the only two options. I was thinking of
dividends is another possibility. You hear a lot of guys in the UK talking about, I take a very small salary and I take a very large dividend.
Yeah.
It's not as tax efficient over to here to do it that way.
Okay.
The key thing to watch out for is the different classes of PRSI. So, as a self-employed person, as a proprietary director, controlling more than 50 or owning more than 15% of the shares in the company, you should be paying Class S1 PRSI, which means there's no employer's contribution, and it's just all employees' contribution. It means you are entitled to slightly less social welfare benefits, but the rules are the rules and they're quite clear.
Can I just go back to pensions for a second? And it might be out of your realm, right? I'm not sure. Companies paying your pension as the director, and you're given two choices. It's an employee contribution or an employer's contribution. What's the difference, and which one should you choose?
It's more specifically a pension question, but as an employer with an employer's contribution, there is no employer's PRSI in it.
Okay.
I think.
Okay. We can check that.
We can check that.
Yeah. So it is. It's probably we need to talk to a pension
and
ninja.
Tax again. I'll generally refer that to the tax department to check for me.
Okay.
What do most successful small businesses get right financially?
See, it depends on your definition of success.
Well, they're making a profit, they've got staff, things are going well, they're 4 or 5 years in the business.
Okay, for me, they're profitable, no big cash flow issues. They're in line. They have a plan of some sort for getting out. They are. The business runs without necessarily them being there every hour of the day. For me, that's success. That it's not dependent completely on the one person. Typically, these businesses, that's my definition of successful business, that they're given a decent income, and typically for me what they look like is they're organised, number one. Number two is the information is coming in. Let's say if it's December a year end, by the end of January they're ready to do their accounts. Right. The deadline isn't until September. Mm-hmm. They're organised. They're not waiting for me to tell them whether there's a profit or loss there. They're looking for confirmation for me to do statutory accounts and to have the meeting that's planning what's going to go on for the next 12 months. Right. You'll pick up little things, but you're not picking up huge errors or huge mistakes. They've got good people around them that they're delegating to. Yeah. And that they can rely on them with their trust, and they trust them. They're not shouting, roaring and yelling at staff. And there's a calmness about them. They're using the technology that's there and available to them in a lot of the aspects of what's there. You know, whether it be what they're selling or how they're running the business or their reporting systems, and that tends to be the profile.
Okay.
If we go back to the original analogy that we're using with the business as the human body, is it fair to say that the cash flow is the blood of the body?
Absolutely. It just, if there's no cash there, the whole thing is far more difficult. If cash flow is an issue, the effort goes in to getting money in. So instead of doing positive things like developing the business, finding new products, trying to figure out where to save cost, you're spending your time chasing money and chasing customers and trying to and wasting, it's negative energy going into
all that. The massive distraction.
Yeah, and really that distraction becomes the problem of the directors ultimately, who really it should be, who should be concentrating on the development of the as you said it there, Paddy, it's the heart of the business are the directors really, and they're going to drive that business and push that business forward.
Okay.
What do you do to mind your own health and well-being as a business owner who has maybe a lot of different stressors coming at you?
How do you switch off?
How do I switch off?
Do you switch off?
Yeah.
I must say, straight up, very hard to switch off.
You strike me, I think, because of conversations you've had, somebody who works more than average.
Yeah, I would look, I enjoy what I do. I've been doing it for a long time. It's very important to me. I've strong relationships with my clients. Yeah, you know what's going on in their business, and it can be difficult to switch off. I think with a lot of businesses, as the business owner, we strive to have the business running without us there. It is hard to switch off from it. It's easier when you have business partners. They'll share the burden. It makes it easier getting away on holidays. You can forward emails to other appropriate people who can watch that for you when you are away. I do a number of things from my own point of view. I'm involved in music again. The old COVID situation has knocked that on the head. I played the French horn, the local, in a concert band. That's something that's great for switching off the head. I'm involved in coaching football teams. I get a lot of satisfaction out of that. Good group of minor footballers who are it gets you out, it forces you to get outside and take exercise. Of a dog I walk. He's become more of a friend in the last 2 years than he has been in the last 9. Right? But again, like that, it's getting out, exercising. Again, I have a number of good friends who I can run issues by. I don't have an accountant.
Do you send emails at night time?
Less or so now than I would have. But I would, if I do see something that I feel that's urgent for a client and I can answer quickly, I will reply to it in the evening, yeah. If it's sitting there and, watching TV, I might have a quick check. It's a habit I'd like to break. Yeah. I would admit that.
If you were looking at
a sad film, would you cry?
That's exactly what I was going to ask you. You cried at sad films. What was the last film you cried at?
I don't usually cry at films. I'm more likely to fall asleep during them.
Jesus.
Yeah.
Okay, that's so sad. Okay, moving on. All right. If you took a good accountant and a bad accountant right now, just put yourself in a startup shoes now, and you just have never dealt with an accountant before, what would be the distinguishing factors between a good accountant and a bad accountant?
I think a good accountant will try to educate you as to what's going on.
Okay.
Inform you so that you're making these decisions yourself. A bad accountant wants to control and own your financial records to make you dependent on them.
Wow.
And it's hard to get away from them.
Yeah.
You become over dependent. A good accountant wants to empower you so you're aware of what's going on. You're aware when there's a problem there, so you know when to pick up the phone.
Yeah.
And that it's your business, not their business.
Yeah.
And that when you want to, when you need it, they're going to be there to answer the questions.
Yeah.
And you get on with them.
That's.
I've spoken to people, and that's exactly.
Yeah.
I've spoken to a couple of guys in the past who would have told me that they can't. They're afraid to move away from their accountant because
they've all the paperwork.
They have all my stuff.
Yeah.
It shouldn't be like that.
Okay.
It's they're really a good accountant should supplement the business, and we tend to be a good pair of outside eyes. Now, in all fairness, we're not trained to say, "Geez, lad, that's a great idea." We're trained to look and see where there's a weakness or where there's a problem, where something might go wrong.
Yeah.
So we can come across as being negative, but
is it fair to say accountants would be more risk averse?
Absolutely. Again, clients have said to me, would you do that? Or, is that something you do? And the test I will often apply is the sleep at night test. So is that something? So, we all have our different attitudes and levels of risk. Some accountants have a very high threshold. They're happy to take big risks.
Yeah.
And for me, it's the sleep at night test.
Very good.
If you're happy to go on with that, to make that decision, if you can sleep at night having made that decision, make it. If you can't, don't do it.
That's interesting. Very interesting. We jump onto the.
There was one thing that a lot of people would probably be wondering, and it's around the revenue, right? It's this big scary monster in the background, and you're always wondering, well, will we get a revenue audit? What's a revenue audit look like? We're going to obviously, they take all our money. What's the story with somebody who doesn't know anything about the revenue? What are the do's and don'ts?
Okay. Number one is a lot of business owners are afraid of revenue audit, and they're afraid of revenue. Okay. Flippant comment, there's no tax problem money won't solve. So the most likely outcome of a revenue audit is you're going to have to pay a few quid.
Yeah.
Number one. Okay. So what happens in a revenue audit is you get a letter, and they basically say, look, we're either going to come out and we're going to inspect your records.
What's the probability or the ratio of these letters or of the audits?
It's quite low.
Okay.
It's very low. Now, within our office, we will get one or two every year. Revenue have, the whole system is becoming more computerized. It's more intelligent. They're working on, logarithms based on what information has been filed and what looks inconsistent and what looks wrong. And that all sounds very scary. It actually isn't. The fact of the matter is the majority of businesses that we're dealing with want to do it right. They're if you're building a business that you fundamentally want to sell or have an opportunity of selling, or you want to build a business that's going to run without you being there.
Yeah.
Well, the reality is you have to have it systemized. You have to run it properly, and that'll present a business that really isn't going to give you a whole lot of problem with revenue. Revenue are looking for under-returned sales. They're looking for incorrect VAT rates. They're looking for people taking money out that haven't paid, that haven't gone through the PAYE system, or they're looking for inflated expenses. And the reality is, if you're going to undertake those activities, again, can you sleep at night when you're doing it? Well, you're taking a risk down the road. If you can't sleep at night, well, don't do it.
Very good.
That's simple.
What, now that we're coming to the end of our chat, right, our podcast, we wanted to see if you have any top 5 or top 10 tips that you can give.
Okay.
Small businesses and startups.
Okay, top 5 tips. Number 1, have a plan. Number 2, be organised. Number 3, control cash flow. Number 4, employ great people. And number 5, make money. Make it profitable.
Great.
Great.
Okay, we're going to wrap it up there, Eoin.
Thanks very much for your time, Eoin.
Of myself and Paddy and all the crew at the Business Fitness
Thanks,
Podcast.
lads.
We'd
Thanks,
like
lads.
to say
You'll hear them all
thanks very
creeping
much.
around the background there through the whole episode.
We had a couple of sound effects today.
Yeah.
Thanks very much for joining us today. We really appreciate it. That's our financial episode, and there's some brilliant information in there. So thanks a lot.
Yeah, some fantastic golden nuggets. Hopefully our listeners and viewers have gotten some from it, and they can apply it to their business and help them to make some money.
Yeah, and if anybody has any questions, you can email hello@thebusinessfitnesspodcast.ie, and if anybody has any questions for Eoin, we can pass them on and we'll get back to them. And just to highlight again, we are looking for a female to come on as a guest in a very soon episode. We haven't had a response yet. The ladies are hiding on us. So if there's a lady out there running a business who thinks that she'd be a good guest, please get in touch. And that's it from us. Over and out.
Thanks very much. Bye-bye.